Hi everyone, I am Donna, the accounting lady. Let me see if I can get rid of that echo. Today I wanted to talk a little bit about commingling. Big topic, I covered this several times. I will probably cover it several times more. Before I get started, as always, if you enjoy these videos or get anything out of them, please like, share, and subscribe. Help the people that you know learn about how to run their businesses effectively and efficiently. Commingling funds is what happens when you mix up your personal and your business money. Professionals, such as attorneys, where they're holding funds for their clients that they haven't earned it yet, they have to keep that money in a separate account. And if they allow those funds to touch, there's very strict rules about commingling for professionals who are holding funds on behalf of their clients. But even for just your regular business owner, they need to be aware of what commingling is and why it should not happen. And like I said, that's where you are mixing up your personal and business funds. Now, several of my clients are sole proprietors, and so they just say, it's my money either way, which is true. But when you are paying personal bills out of your business account, business bills out of your personal account, that actually does not do you any favors. That actually is a very, very bad thing, because one, your accountant can't tell what's actually going on. Number two, if the IRS ever decides to audit you, they will eat you for lunch, so to speak. If you have an LLC or a corporation, if you've incorporated, if you have any sort of limited liability company set up, it pierces the corporate veil, which I will talk about in a later video, and actually opens it up. It collapses the limits on the liability, so to speak. So if you want to maximize your tax deductions, if you really want to understand what's going on in your business, it is critical that you keep your business money separate from your personal money. Now, I totally get it. There are times when you're at the grocery store and you forgot to transfer money to your personal account, so you just swipe your business account. 20 years ago, I would have said, yeah, that's fine. But today, with the apps that we have, I can transfer money in seconds from an app on my phone. And so it's actually a lot less acceptable today because it's so easy to move the money around. And if you transfer the money from your business account to your personal account, it saves you headaches in the long term. Because again, if I'm doing someone's books and I see expenditures at the grocery store, I don't actually know what that's for. I don't know why, why are you spending money at the grocery store? And so I will assume that's meals and entertainment. But that actually throws off your books. I talked in a previous video about the fact that financial accounting for your business and tax accounting are not the same thing. So I'm less worried from a tax standing, but if you want to know what's going on in your business, you've got to keep that business money separate. With that said, how do you then get money out of your business and use it for, how do you take money out of your business if you want to use it for yourself? You just transfer it from your business account to your personal account. We mark it as a draw, which is what it is, and then you can do whatever you want with it. Or you write yourself a check and deposit it in your personal account. That just kind of keeps those lines really clean. That just, I do not ever recommend that a client withdraw money from their business account into cash. For example, I don't like it when my clients go to the ATM and just withdraw cash from their business account. I would actually prefer that they transfer the money to their personal account and then withdraw it, unless they're going to give me documentation of what that money is going to be spent on. Again, it's because it's because it's more difficult to keep track of cash transactions. So if you do withdraw cash from your business account for business reasons, you will have to keep very very detailed records of how much you withdrew and what it was used for, so it can be properly accounted for. I get that sometimes you do just need cash, but we do need to keep very tight records on what it was used for, so that you know. You can't manage what you don't measure. If you don't know what you're spending cash for, that if it's business cash, then it can cause headaches down the road. So that's what commingling is. That's kind of why I strongly discourage it. Every single one of my clients that I've had over the past 12 years has commingled in some form. So it's very common. I've had hundreds of clients. But I also really strongly discourage it. I talk about it a lot because I want my clients, and I want anyone that owns a business really, to understand why it's not recommended. And really, how badly it opens you up to problems down the road. That's it for today. I will talk to you again soon.